Let's talk about everything you need to know about being a first-time home buyer. If you've owned a home in the past, can I qualify as a first-time home buyer? Well, the good news is if you're buying a home for the first time ever, you are a first-time home buyer. But it is also someone who has not owned a primary residence in the past 3 years. So that means if you've owned a house before, but it's been more than 3 years since you sold it, you actually still qualify as a first-time home buyer. So if you meet that definition, you may be eligible for certain benefits such as special financing options and even some tax credits here in the state of California. These benefits can vary depending on specific programs that are available at any given time. So it's super important for you to reach out to your lender and discuss your options. So how much down payment do I need for a house? Many first-time home buyers believe that they have to put down 20% on a home, but that's so far from the truth. So how do you know how much down payment you really need for a house? Well, the average down payment is only 6%. This means that you don't need to have a huge amount of cash saved up to buy your first home. And there's even some loan programs out there that are backed by the federal government that provide low down payment options, such as FHA loans. They only require 3.5% down. Or if you happen to be a veteran and thank you for your service, VA loans are out there for veterans and you don't have to have a down payment at all. So take some time to research your options and let me connect you with the lender so we can determine what loan program is best for your situation. We definitely want to make homeownership a reality for you. So why do so many people say that 20% down is the minimum requirement? Well, basically it's because you're trying to avoid something called private mortgage insurance, or PMI. PMI is basically there to protect the lender in case you don't make your payments. So it can significantly cost a lot more on your mortgage on a monthly basis. However, it's important to note that many people put down less than that 20% and they still manage to become successful homeowners. So when considering how much to put down on your home, it's important to weigh the benefits and the costs of the down payment versus PMI insurance. Your lender can definitely help do an analysis for you. So how do you choose a good lender? One of the biggest mistakes first-time homebuyers make is not shopping around for a mortgage. They assume that all the lenders are the same and that they're going to get the best deal from their current bank. And typically that's actually not the case. It's essential to understand the difference between banks and loan brokers. Banks are limited to the loans offered at their institution. On the other hand, loan brokers can shop dozens of different banks on any given day for the best loan for your specific situation. So most of the time, I'll recommend clients to a loan broker. Second, consider the lender's reputation and what type of customer service you're going to receive. Keep in mind, you're probably going to be working with them for the next 15 to 30 years, so it's super important that you choose a lender that you can trust and that you can communicate well with. Finally, pay attention to the lender's fees and their closing costs. So now that you've picked a lender, it's time to get a pre-approval letter from them. A pre-approval letter is a letter from a lender stating how large of a loan you are going to be able to qualify for based on your income and assets. Every lender requires a certain amount of documentation in order to approve you for that mortgage loan. It's a pretty extensive list of items that the lender is going to want to have you provide to them. So first off, you're going to need to provide proof of your income. This can include things like your pay stubs or W-2s, or if you're self-employed, you'll need to provide tax returns. You're also going to need to provide documentation of your assets, which will include typically your most 2 current bank statements and any investment statements, which are typically sent out on a quarterly basis. Lenders are also going to ask for a copy of your personal ID, such as your driver's license and your social security number, so that they can run a credit report on you. Finally, you're going to need to provide documentation of any current debt you have. So if you have credit cards and you have balances on those, if you have any car loans or any student debt or student loans, that is also going to need to be provided to the lender. So these are some of the most common documents that you're going to need to provide. So I would recommend that you go ahead and gather all those documents ahead of time and have them saved in a file on your computer so that when you are ready to buy a house and get pre-approved, you can send them all off to the mortgage loan officer and get you pre-approved as quickly as possible. So now it's time to go house hunting. If you'd like me to connect you with a lender, please click the link below. If you'd like to sit down with me and have a personalized buyer consultation, please click the link below, and I look forward to working with you.